Mr. President, I want to talk a little about the resolution we're moving to that will allow us to repeal and begin the replacement for the President's health care plan. It was a little over 3 years ago, President Obama hailed the start of the Obamacare exchanges as a life-changing opportunity for Americans. Well, for most Americans, it was life-changing, but it didn't turn out to be an opportunity. It was a life-changing experience because in many cases, the insurance they'd had no longer was affordable. What they thought met their family's needs no longer available, and the cost continues to go up. When President Obama pushed the health care system through Congress, the health care law through Congress without a single Republican vote, he repeatedly assured Americans that they'd be able to keep the plans they had, they'd be able to keep the doctors they had, and by the way, every family would have a significant deduction in their health care cost. He continued to make every one of those commitments until the plan actually was put in place, and it was obvious that those commitments were not going to be what happened. By the end of 2013, at least 4.7 million Americans had their plans canceled because they didn't meet the law's mandatory requirements. Now, remember, Mr. President, these were plans that 4.7 million people thought met their individual needs and they could afford those plans. That's why they bought them. They might not have been perfect. They might have still been a stretch on their budget, but they decided this is insurance I can afford, and it's insurance that meets the needs that I can afford to meet with the insurance I can buy. The president's claims about everybody being able to keep their policies and keep their doctor were so far from reality that PolitiFact rated it as the lie of the year. Now, I don't like to use that language as it relates to the President of the United States. I would say this must be really easy to become isolated in the Oval Office, and the President may get lots of information that sounds like to him his plan is working, but the truth is that the President's not entitled to his own facts. He's entitled to his own opinion. He's entitled to his vision of what he thinks health care in America should look like, but he's not entitled to his own facts. If it's not happening the way he thinks it's happening, somebody needs to tell him. But of course, in just a few days, there'll be a new president, and we have to deal with the chaos, frankly, that's been created under the old law. President Obama said this law would mean more choice, more competition, and lower cost for millions of Americans. Nobody can find those Americans. A number of Americans got on Medicaid, another government program, that weren't on Medicaid before, but there weren't Americans that had more choices, and there aren't millions of Americans that had more competition for their business, and there aren't millions of Americans that had lower cost. In fact, just the opposite would be the case. In Missouri, where I live, a number of insurers have pulled out of the exchange totally. Our neighboring states all have the same experience, and in some cases, even worse experience. But the competition and the choices just aren't there because the system doesn't work. This year, we have 115 counties in our state, Madam President, and in 97 of them, you have one marketplace, you have one choice, you have one insurer offering insurance. Now, that one insurer may offer 3 different plans, but there's no competition for whatever level you were shopping for. There's only one place to get that level. This would be like if there was one shoe store in town and none of the shoes fit and they all cost too much. But if you didn't buy shoes in that shoe store, and the chairman of the budget committee here knows a lot about shoe stores, if you didn't buy from that shoe store, you'd have to pay a penalty for not buying shoes that were available at that one location. Everybody would think, well, that's unacceptable. You ought to at least be able to drive to another community and look for shoes. But that's not the case. 97 places, 97 counties, the vast majority of our state, and a couple of states have, on the individual exchange, no counties that have competition. We went from every county a year ago in Missouri had at least 2 companies offering insurance. So there was at least a competitor. Some had more than 2 companies offering insurance. Now 97 have 1 company, and the promise was to bend the cost curve. A cost curve bent, but it bent the wrong way. The cost curve went up, it didn't go down. In our state, again, increased premiums have been as high as 40%. In a number of states, they're in the 70% category. And in one state, there's a 100% increase, not from when Obamacare started, but from last year. Last year, in places where the cost of insurance for individuals and families had too often already doubled, now another add-on. I was with somebody the other day, and I asked them about their insurance. He was a healthy guy in his mid-40s. His wife and his 2 daughters were healthy. I said, "What are you doing for insurance?" He said, "Well, I'm self-employed." And he said, in 2009, there were 4 of us. We had insurance we thought met our needs. We were paying $300 a month. He said, now we're paying $1,190 a month. And we have a $7,500 deductible. And if 2 of us are sick, we have to hit that deductible twice before we get any assistance from the insurance company. A $15,000 deductible if 2 people in the family are sick, with an $1,190 monthly premium. And this is a family that had no health care problems. This is not a response to somebody who's got a policy that they were using. This is a policy that wasn't being used. And of course, with a $7,500 deductible, unlikely to be used unless that family really has a catastrophic situation occur. And what I believe that family found out a few months after I visited with him was that their policy went up to closer to $2,000 than $1,190. The average deductible for a mid-level plan, there's sort of the gold plan, the silver plan, the bronze plan, the silver plan. The average deductible in the exchange last year was $3,000. The average deductible in the bronze plan was $5,000, and it's higher than that for many people. To make matters worse, if you aren't able to afford the few options available on the exchange, you pay a penalty. So you have no competition. You're required to buy the product, and if you don't buy the product, there is a penalty. It could have been as much this year as $2,045. But if your option was to pay $15,000 or $20,000 for insurance that has this high deductible, that's what many people have decided to do. I've heard a lot of Missourians from the day this was initiated through today talking about the individual challenges they've seen. One, Dave in Columbia, a small business owner, said his premiums for his employees have doubled. Now, why would that be the case? One, the standards necessary for a policy change. 2, if you're losing all this money on the individual marketplace, insurance companies make that up somewhere. And so his premiums have doubled. At the same time, they have continually had to raise deductibles and seriously reduce benefits. Costs go up and the coverage goes down. I think that's what President Clinton said when he said this is a crazy system. It's costing more all the time and covering less. That's what Dave has found out at his business, and he was told late last year that he should expect a 40% increase this year. Said if that happens another time, we're no longer in the employer-provided insurance marketplace. Another location that serves our state, it happens to be headquartered in Columbia also, is the Older Americans Transportation System, a not-for-profit, a They provide critical transportation services to older Missourians, and they do in other places in the country, older Missourians to low-income people, to underserved parts of our state who don't have other transportation options. The cost to insure their drivers has gone up by $500,000. And the paperwork to comply with the law's requirements is, the executive director told me, so complex and cumbersome, they had to spend additional money to hire a consultant to implement a software program to help them keep up with the new mandates. Suddenly got even harder to be a not-for-profit and break even. Families and small businesses really shouldn't be penalized because the law did not live up to its promises. If you like your health care, you can keep it. If you like your doctor, you can keep your doctor. Family cost will go down by $2,500 after this plan is put in place. Those things didn't happen. We are in a chaotic situation now, and it's time to move in a new direction. We'll have a bill before us very shortly that will allow us to begin that transition, to do things that will prevent Washington from getting in between healthcare providers and their patients. We'll do things that will break down barriers that artificially restrict choice and prevent Americans from picking insurance that meets their family needs that they can still pay for. What a concept that would be. This is basically the system we had before. It wasn't a perfect system. And I will say the biggest straw man put forward in that system was nobody else had any ideas. There were plenty of other ideas that would better serve American families, American job creators, American job holders, plans that would have allowed small businesses to band together and become a bigger group to seek group insurance for a number of businesses instead of just one business's. Health savings accounts and better use of health savings accounts, buying across state lines, things that I proposed specifically on letting your family stay on your insurance a little bit longer. Frankly, that was a 4-page bill that adds 3 million people to insurance every year, where you could stay on your family policy till you're 26. 4 pages, Madam Speaker, with a lot of white space. This does not have to be that complicated. No cost to taxpayers. Frankly, you're adding young, healthy people, not much cost to anybody, but fundamentally no cost to taxpayers. Just an additional way to look at things like buying insurance across state lines would be. There are solutions here, but we have been prevented from moving to those solutions. I urge my colleagues to support the resolution that will allow us to move forward. We'll begin to eliminate the chaos of Obamacare and restore the focus of health care to patients, people, and the doctors they want to have and the places they want to go to get their health care. And I would yield the floor.